Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Lunch I'm Nisha Podar. With me is Mangalam Malu. Mangalam, not looking good on the markets at this lunch hour. As we speak, Nifty 50 is down and Sensex, so both in the red, and the bigger knock clearly coming in from the mid-cap universe. Anuj is right here to put more perspective into the markets as well. Anuj, is it more political in nature, at least at this point?
Not really. Triggers can come, Nisha, but the issue is that the market, as we discussed in the morning as well, today was a day where, 11,050, 60. Once again, if you're chasing that, you're again chasing a, bit of a failed breakout. So that's what's happened today. The mid caps were under pressure since morning and advanced decline at about 1:3. Normally, when this happens, it's a matter of time before the index also slips, and that's what you've seen. Essentially, the market was being held up by HDFC Twins, and you saw a bit of a decline over there, and that's what led to this bit of decline. Also, last 2 days I've been pointing out that the volumes are low. So on low volumes, basically you're seeing this kind of trend. This could reverse as well in last hour. It's that kind of market basically. You can't really take any big directional call. The only call that you can take is that the big selling in mid caps is well and truly underway, and stocks like Ashok Leyland also falling is telling you the kind of problem that we have right now.
Absolutely, Anuj. A couple of things that really stand out as we speak. Well, we have moved back into the green for the Nifty, but the mid caps as well as the F&O volumes. It's just about half day into trade, and the F&O volumes have crossed 7 lakh crores.
Yes.
Any data point that you
the game is being played in the F&O market, Mangalam. Obviously, tomorrow's weekly options expiry as well. So I think nowadays 50-60% volumes come out of that. So that could be explaining this kind of move as far as the options data is concerned, or as far as the F&O volumes are concerned. But the bank Nifty is bouncing back as well from the low point. So let's see if today's low is protected. In that case, again, last hour could be interesting because on the index you have strong stocks which is supporting tomorrow's Kotak's numbers as well. Kotak is now the second biggest component on the bank Nifty. There you expect good numbers. HDFC Bank has been doing well. So all in all, it's not a market which is collapsing, but it's just that it's about risk reward. It's a ranging market. 11,050 is the top, and it's going there. And third time now it's gone down, 11,070 to be precise from there. So that I think becomes your sacrosanct level to watch.
Actually, that was my third question. Sorry, rather second question to you. 11,070 was the level that you gave this morning. Yeah. We turned back from just that. So do you think that still is a heavy ceiling out there?
Yeah, that is, and that is why that's why I respect technical so much, in the sense that at the end of the day, it's turned from a level because. And triggers could come. Today you could argue it was perhaps the no confidence vote or whatever. Tomorrow there could be some other trigger. The fact is that at around 11,070, 75, this market does not have the triggers to take out the previous all-time high. When you get within 7,500 points of previous all-time high, the tendency to book profit is very high, and that's what's leading to this mark actually repeatedly acting as a bit of a barrier for the market. If the strength remains, at some point it will give. But for now, it looks like you'll have to spend some more time there.
But Anuj, at this point, as we speak, Nifty has turned into the green. The bank Nifty is doing better also because of the kind of infusion that we have seen from the government in the PSPs. And that really gave a little bit of euphoria in the earlier part of the day. Mid-cap universe is the weakest link at this point. Nifty, even though it's above 11,000, is more optical in nature when you talk about the numbers, because the larger market is still seeing a huge amount of weakness. That is likely to also persist.
Yeah, and today the Sensex hit all-time high. You ask the investors, do they feel, the market is at all-time high? Look, this dichotomy will happen. This is mean reversion. All through 2017, the mid-cap just kept going up and up and up. 48% gain on the mid-cap index, small-cap index surged. This year is about giving those gains back, and I don't think anyone should have complaints on that.
All right, Anuj, thanks so much for joining us and putting a lot of perspective at this point when markets are really showing huge amount of action as we speak, and huge amount of slight bit of trend reversal also, because just now Nifty has turned into the green. Let's see how pans out for the rest of the day. But as Anuj was pointing out, mid-caps are the weak link, and that's the reason why the market breadth remains extremely weak at this point. Let's hear out an opinion on the markets. Deepak Parekh, the chairman of HDFC, and what he has to say about the current market situation.
Last Thursday, the Sensex and Nifty scaled an all-time new high. Yet this rise was not broad-based, but concentrated only in a few key stocks. So while India is still amongst the best performing major markets in Asia, there has been some decoupling in sectoral indices, and gains have been a bit lopsided. Markets are expected to be skittish in the near term. Factors affecting market sentiment include how fast the Federal Reserve actions on further rate increases in the US, and whether trade-related tensions escalate further.
All right, we'll step into a short break with the news that the Nifty has recovered about 60 points from the low point of the day, as well as the mid-cap index, which has also recovered about 200 points from the intraday low that we saw. With that, we'll step into a short break, come back, and we'll continue our discussion, this time on HDFC Twins, tell you why they're in the news today. Welcome back. Absolutely in the middle of today's trading range as far as our markets are concerned. Some bit of recovery seen in the mid-cap space as well as the Nifty. The stocks that are doing well, incidentally, are alcohol stocks. It's the middle of the week. We have GM Breweries and Radico Khaitan, both of them up. However, their bigger counterparts are losing in trade. United Spirits as well as United Breweries. But let's talk about the power sector. The Allahabad High Court refuses to stay application on RBI Feb circular to power companies. Lata joins in with more details. Lata.
That was the most important point everyone was watching from the Allahabad High Court, whether it would extend a stay of the Reserve Bank's rules, rather strict rules of the February 12th circular, to power companies. No stay came. More importantly, the court also ordered the government to, in 2 weeks, file its report on power companies, and said that it will take a further view on whether power companies deserve some forbearance from RBI after it reads that report. Now, that's what happened today. Just for a background, it was on May 30th that IPPAI, the Independent Power Producers Association, and the Association of Power Producers, two power sector organizations, had taken the Reserve Bank to court, requesting that its circular, which says that stressed companies should be taken to the NCLT if not resolved for 6 months, should be stayed as far as power companies are concerned. Their argument is that their stress is not because they're willful defaulters or don't want to pay back, but it's because the government's power distribution companies are not signing power purchase agreements, they are not buying power even where they sign PPAs, and the coal behemoth, Coal India, is not supplying coal, it is not signing fresh fuel supply agreements, and therefore the Reserve Bank circular, which is a one-size-fits-all, it treats all stressed companies alike, is not the way to go, and they were praying that they be given a sectoral munificence or forbearance. The court did grant a 1-month forbearance on May 31st, but directed the Finance Ministry to call a meeting of RBI, power companies, power ministry and allied parties and, hammer out what the solution can be. Such a meeting was held. But in the previous hearing, the report of that meeting was not filed. The court did not grant an extension of the stay and told the government to file the report in the next hearing, which was today. Again, the government did not file its report, and therefore it's now postponed by 2 more weeks. And the only hope the power producers have is the court saying that we will take a look at that report and then take a view on your case. So they're still holding some hope that they could be given some special status for at least some time by the court from the Reserve Bank circular, which, if applicable, could send a lot of the power companies into liquidation, in any case into the insolvency court.
All right. Thanks, Lata, for putting all that into perspective. That's an important case when it comes to the power sectors and the NPS there. Take a look at HDFC Twins, HDFC as well as HDFC Bank. They are the biggest gainers and contributors on Nifty 50 today. Take a look at that. And that's really holding Nifty above 11,000 levels in trade today. Now, remember that the gain also is coming in because of the sentiment that HDFC AMC is going ahead with an IPO to raise about 2,800 crore rupees, and the IPO is going to be launched on 25th of July. The overall valuation of the AMC piece is about 23,300 odd crore rupees. Abhishek Kothari, our colleague, gets us all the details of this issuance. Abhishek.
SDFC AMC is looking to come out with its IPO, which will open on 25th of July. So the IPO is priced between 1,095 to 1,100 per share. SDFC Limited owns about 57.4% stake in SDFC AMC. So through this IPO, they will dilute 4% stake and they will bring it down to 53.7%. What this 53.7% means in terms of the IPO getting listed is that at the market cap of 23,300 crores, this gets valued at close to 12,452 crore, and SDFC Limited's market cap is more than 5 lakh crore. The issue size is at 2,800 crore, and the complete issue is an offer for sale and no fresh equity infusion.
All right, Abhishek, thanks a lot for that.
Coming on to another news, SDFC Bank has allotted about 3.9 crore shares at rupees 2,715 per share to SDFC Limited. So what this means is that SDFC Bank gets a capital infusion of 8,500 crore. Currently, SDFC Limited owns about 20.8%. So the stake post this equity infusion will increase to about 22.03%. Not to forget, SDFC Bank is coming out with an QIP very soon. So based on this transaction, post the QIP, SDFC Limited's holding will come back to the original level of 20.8%.
All right, Abhishek, thanks a lot for that. The other stock on our radar is Ashok Leyland. Reported a big operational beat in the first quarter, but the stock has been under pressure for 2 days in a row now. In fact, this week itself, it's down in excess of 12%. Let's also listen into what Gopal Mahadevan, the CFO of the company, had to say on the company's performance. Brokerages have written on the continued loss that the company has had with regards to its market share via Tata Motors.
We wanted to ensure that we are managing the working capital very astutely. We still have 1,200 crores of cash in the balance sheet. The net cash is 1,200 crores. We ensured that our margins are better. So this has been I think the 12th or 13th sequential quarter out of 14 where we have had double-digit EBITDA margins. We will have to raise prices if raw material prices continue to go up. I mean, there's no other choice because ultimately you have to do business but do it profitably as well. The market share for the current quarter is 30.2. This is on MHCV segment, and we have fallen approximately by about 4%, 4.5%. But on LCV, let me share with you that we have gained market share. So LCV has done wonderfully well. It has posted a 34% growth in volumes, and we have moved from 15 to 16%. We could have shored up market share by giving more discount and also pushing stock into the system, but we decided to kind of abstain from this strategy at all. I mean, we said that we'll have to grow this business profitably. And if we were to do that, if we had to walk away from deals which were very clearly unprofitable, and giving negative margins, we decided that we'll have to let some of the business go.
All right, so that's the word coming in from Ashok Leyland. Remember, the markets have been extremely reactive to the performance as far as earnings are concerned. And let's take you through some of the earnings that are expected today coming in from the tech pack, and Mindtree as well as NIIT Tech will be reporting their Q1 numbers today. Rima Tendulkar is right here with the street expectations on what's expected. First, Rima, to Mindtree.
Stock is trading very close to record levels of close to about 1,100 rupees that it hit in early part of May. And also valuations for this are at the top end of the mid-cap band, close to about 21-22 times F520 PE. Expectations are high. Dollar revenue growth is seen up 3.5%, helped by a strong deal ramp-up. Margins are seen lower by 150 basis points to come in at 12%, impacted by the wage hike as well as visa costs, which will only be partly offset by the currency benefit. A decline in profit margin will drive a cut in the profitability as well, PAT down close to about 13%. Now, the key reason why the stock has been such an outperformer has been improving growth rates. So if you look at the performance of the company on a year-on-year basis for the last 2 quarters, it's tracking a double-digit run rate. So last quarter, the company delivered a 15.5% dollar revenue growth on a year-on-year basis. Also, their margins have consistently been improving in the last 4 quarters. So at the start of F518, its margins were close to about 11%. It ended FY18 at close to about 16.1% at the EBITDA level. The key to watch for will be the traction in digital, the performance of acquired entity, Bluefin as well as Magnet 360, because they were drags last year and now seem to have stabilized. And finally, the performance of the non-top 10 clients, because their top 10 clients have historically driven the revenue growth for the company.
Right, Rima, and NIIT Tech, what can we expect from there?
This one too has been one of the best performing IT stocks, rallied 75% in 2018. Q4 was an all-round beat. Their FY19 guidance was positive. So we're working with the dollar revenue growth, which is seen flat on a quarter-on-quarter basis in Q1 due to seasonal weakness in GIS and a planned ramp down in one of their clients. That's their joint venture with Morris. Margins also seen impacted by wage inflation. So margins seen down at 12.2% and profits will fall by close to about 12%. We'll wait to see whether the company continues to maintain that optimism about FY19. So when we last spoke to the company, they told us that they expect a double-digit growth in revenues on an organic basis in FY19. They also expect margins to improve in FY19 vis-a-vis FY18. The company has seen an improvement in many of its metrics. So their order inflows, which were close to $100 million, touched $145 million in the prior quarter. The large deal wins have been improving. So in Q1 and Q2, the company won 2 large deal wins. In Q3 and Q4 of FY18, the company had 5 large deal wins. Also, the contribution of digital as a percentage of its revenues have been inching up from nearly 21% at the start of last fiscal year and ended with 26%. So a continued improvement in these metrics will also be tracked closely.
All right, Rima, thanks so much for getting us all the details. Quickly, we'll slip into a short breather on the show. But up next, remember, government set to raise the retirement age of judges. Details on that CNN News 18 news break when we return. Welcome back, and markets have slipped into the red again, and Hindustan Unilever has become the top, dragger for Nifty 50 at this point and at the low point of the day. Axis Bank has also lost a lot of steam in the last few minutes of trade. Mid-cap universe remains weak. Let's take it straight to a big, important development in the national news space, and top government sources tell CNBC News 18 network that the government is mulling to raise the retirement age of higher judiciary. My colleague Ashmit Kumar is joining us with all the details of this development, if it happens, and the implications of the same. Tell us, Ashmit.
Well, keep in mind that as far as the retirement age extension is concerned, that was mooted first by a parliamentary panel which came out with a report in the month of March earlier this year. It clearly said that there were issues pertaining to the large number of vacancies in the court which were contributing to the large number of pending cases. Now, to address both these anomalies, what the parliamentary panel, which was headed by a BJP leader, Bhupendra Yadav, what that parliamentary panel essentially recommended is that the retirement age of High Court judges should be extended from 62 to 65, and the retirement age of Supreme Court judges should be extended from 65 to 67. Now, what we've picked up, what our network is picking up, is that there is a concerted move by the government to consider coming out with a bill to make that change to the Constitution, to allow for that change. That is, of course, being consulted. That is, of course, being mooted as of right now, given the fact, and it assumes significance, given that the monsoon session, in fact, began today of the Parliament. Now, what's important here is, as for the procedure to go about it, let's keep in mind that there are very specific articles of the Constitution that provides for it, and it will be a long and a tedious affair for bringing about this constitutional amendment. But of course, as of right now, the move being considered, we'll have to wait and see if it comes up.
Absolutely. Thanks a lot for that. With that, that's all the time we have on Business Lunch. Stay tuned to CNBC TV 18. Mid-Cap Radar comes up next.